Hey guys, Mark McMahon Real Estate. Thanks so much for joining. Today, let's talk about what's going on in the stock market. One of my index funds has dropped down 7.7%. Now that's a drop in the bucket compared to some of the other stocks that we have seen a big hit this year so far. Peloton, that's crazy, right? So what I want to talk about though is how that's going to affect the real estate market. So stay tuned, put on your seatbelt, let's do it. All right, first of all, let's talk about the difference between stocks and real estate. Number one, stocks are much more volatile than real estate, and they move much more quickly. They move more quickly. They move quickly compared to real estate, right? Real estate is like a dinosaur slowly marching along. If it's going to go downhill, it's going to go downhill slow. It doesn't just slump overnight. If it's going to go up, it goes up slowly. Not like the stock market. The stock market is very volatile. Someone can say, hey, look, I'm going to sell all my shares in this and this and this, and this stock will double. Or this stock will drop by 50%. It happens all the time. That's why I like real estate a whole lot more. So what do I think is going to happen here? How is real estate going to react to what's happening on Wall Street right now? Well, kind of what happens when the stock market takes a little bit of a dump is people start selling stocks, right? I mean, that's 90% of the people that are in the stock market are in it to win it, right? If there's ever any losses, they jump out and say, oh, that was stupid, I'll never do it again. And so that further deepens the stock market issues, and drops prices even more. But what happens then is a lot of people, as it goes down, 10%, 15%, a lot of the people that are savvy will take money out and put it in hard assets to hedge their bets. So hard assets could be the bond market, it could be savings account, but for the most part, people like to put it in real estate. I think what's going to happen right now is people are going to keep pulling out of the stock market, the unsavvy people. Now, I've got money invested in the stock market, and I'm not pulling out. In fact, I just was, Alec can attest to this, I was working on my accounts today to shift some more money into index funds, money that I'm not using for real estate right now. So I'm definitely buying the dip. Is it going to go down further? Maybe, probably. I don't know. It goes up, it goes down. Who knows? But I know right now it's down from the previous high, so I'm going to put some more money into it. But real estate might be a safe haven for investors right now. So it may drive prices up. If you're a flipper, if you're a buy and hold guy, if you're a wholesaler, there could be some opportunity out there for you. Do I think it's going to tank the real estate market? I do not. I don't think so. I think there's a rift. I think there's a crack in the surface right now. But I don't think we're there. I think we will be eventually. I think the real estate market will correct. I absolutely do. But I don't think this is it. It might be later this year. It could be in a week. I don't know. But I don't think that's going to happen right now. If the market keeps dropping, so let's say we're down 10, 15%. Real estate's still safe, right? People are putting their money into real estate. So when people are feeding the investment, it tends to go up or stay stable. What happens is when the market drops down so far, everybody loses faith in everything, like happened in 2007, 2008. People lost faith in everything. The stock market crashed. Obviously, the housing market crashed under very different circumstances. But if it drops enough, then it will affect the real estate market. So the next question is, if it does affect the real estate market, what should you do? Well, you've always heard, guys, buy the dip, right? Buy the dip. When the stock market goes down, you buy. If you're really smart, every month you put money in, so you can take advantage of those market gyrations and make way more money. So it's always advantageous to put money in every month rather than once a year in the stock market. Housing is a little bit more difficult to do that. But this could possibly turn into a very big opportunity for those of you that have some dry powder or have access to money. For those of you that are just getting into the market, I say status quo. I'm okay with you keeping on. But I want you to do the two things that I always say that you should do, though. Please, please, please get a deal. Get a deal. If you're buy and hold, get a deal. If houses are selling for $300,000 in the neighborhood retail, you better be getting it for $175,000, no more than $200,000. All right? And I know a lot of people would disagree with that. They would say that that's too high. Do not pay full retail. If you're paying full retail for a rental and you say, oh, well, it still cash flows, that's not good enough because the market can correct. Can and does. So you need to get a deal. That's rule number one. Rule number two is it has to cash flow, right? It has to cash flow. Can't cash flow in the future, right? You can't go, well, next year I can raise the rents and it should break even and the next year will cash flow. That's not good enough. That is not good enough. That's speculation, right? That is pure speculation. That is gambling. Investing, done right, doesn't have to be dangerous. What happens is people get in trouble because they don't buy the dip. They get excited about a stock because it's going up. And they go, well, I better get on before something happens, before it keeps going up. And then it stops, and you're at the top. And then it has to come down. When you buy real estate, no matter whether the market's going up, down, sideways, or anything else, even if it's doing backflips, you got to get in under market value. So we got a deal under contract yesterday for $400,000, and I'll share it later on once we're closed and everything's done. You should be following my Instagram because I put all of this information on there. It's Mark McMahon Real Estate. So, but we got this. It's not a house. It's a duplex. It'll be a triplex. We got it for $200,000 under market value. Right? So, and that's after we fix it up. That's what I think is going to happen in the real estate market. That's what I think. That's the way I'm going to play the real estate market right now. I'm going to continue buying, but I'm going to buy at a heavy discount, as always. So I won't be buying as much as a lot of people out there, right? So a lot of people out there are still very voracious. I got to buy something every week, you know, and more debt. Debt is good. Debt is good. Don't get me wrong. Wise debt is good. Over leveraged debt is bad. All right, and it's got a cash flow. It has to make money every month. There's no damn point in owning real estate if it doesn't cash flow. So, in conclusion, you can keep doing what you're doing. I don't have a problem with it. But follow my rules. The cash flow, get a deal. On the stock market, that's not mine. But I am going to continue to buy the dip on that with the spare money that I've got. So take it for what it's worth. Guys, I appreciate you being here. If you'd be so kind as to hit the like button if you like this, subscribe to our channel, and sign up for notifications for Allie. There is something that Allie put together called the New Investor Bundle. It's a bunch of stuff that I've put together over the last year or so. There's handouts, there's videos, there's all kinds of good stuff in there, and it's free. So what's the catch? There isn't one. Absolutely download it. It's free. Enjoy it. There's a link below. And if you guys are interested at all in learning more about how I built my real estate empire, we have a course that is also linked down below that will show you how to get started to do that also. So guys, take a look at what's down there, what we've got to offer. I appreciate you being here, and I'll see you next time.